Hello, everybody. What's up? What's up? This is Leviathan News. DeFi Advisor here. What's up, everybody? I'm joined here by our lovely co-host for the day, Sam, and the lovely Jonathan from BCAS. This is how I say it, Jonathan?
Yes, that's correct. Hi, and thanks for the invite on the show.
For sure, for sure. How are you, man? How are you guys?
Yeah, so far so good. It feels like we're at the cusp of the next stage of the market, whatever it might be. So yeah, exciting times ahead.
Most definitely. Most definitely. I actually wanted to have you on because of this article that I saw that you guys at BCAS put out about staking saves the curious case of Yearn finance. I actually want you to maybe walk us through it because I thought the subject was kind of interesting. And Sam, maybe I'll give it to you so you can share it on the screen.
Sure. I'll bring it up.
Great, thanks a lot. But first, Jonathan, can you maybe tell us about BCAS and what it is and what you guys actually do?
Sure. So I founded BCAS in 2017, and it's set up as a consulting group of right now we're three companies and one law firm in total, where we've been set up since day one as crypto exclusive, I would say, and we target two main areas of the crypto industry. Simply put, we cater for both the centralized part and the decentralized part. In terms of the centralized part, we work with tier one exchanges and custodians, makers, etc., where we help them with matters such as licensing, legal opinions on tokens, and also general strategic advisory in terms of regulatory expansion. And then the broader part of our business relates to the crypto industry in general. We work with well-known layer ones, layer twos, and DeFi protocols as well. And we assist them with anything in terms of guidance on where to set up, the right structure to use, the tokens themselves, how to structure them in such a way that as much as possible they try not to have security-like elements in them. And last but not least, we've also done a lot of work on the area of decentralization, where in 2021 we launched, I believe, the first kind of service, which we termed as a decentralization and legal risk audit, where we gauge how truly decentralized the protocol in question is from a legal angle, economical angle, governance angle, etc. And that is, I think, is something that is proving to be more and more useful to this very day.
I understand. How many how many years do you guys exist?
Since 2017, so now we're entering into our seventh year of existence.
That's quite a lot in crypto, actually.
It's a lot, and I've been in the space myself for longer than that, since I started pretty much focusing on it on a full-time basis in since 2013. So I've been around for quite a while.
What made you actually choose to go this route and to come up with a consulting firm? How did you decide to take this specific opportunity, and what were the circumstances that probably led you to this decision?
That's an interesting question. One that I like answering. So in 2013, I was still about to choose a topic for my doctorate of law thesis. So I was still studying back then. And while I was thinking about the topic to study, I was actually building my own laptop. And I had problems in sourcing the graphics card. So I went on the internet and I said, okay, what's up? Why are there problems sourcing AMD graphics cards back then? And I said, there's a lot of mining going on, Bitcoin and crypto mining. And I said, hang on a minute, what's Bitcoin? What's crypto? Sounds interesting. So that's how I got to know about crypto in general. And then once I did some research, I said, you know what? I'm going to dedicate my doctorate of law thesis to this topic. And in 2014, started writing a doctorate of law thesis on the subject of Bitcoin and how it might impact legislation on anti-money laundering. And then I published that thesis in 2015. So that's how I got, I would say, involved in the space. And then 2017, there was the ICO boom, and it was, I can say, a veritable wild west back then. It was a crazy year. But I realized that, like through the ICO boom and everything that was going on, the legal side of it was very much overlooked and ignored. So I said, I think there's room for, let's say, there to be legal guidance to various projects in crypto. But the one missing ingredient is that most law firms out there have no idea about the industry from a technical perspective. So we said we're going to do things differently. Apart from covering the legal area, we're also going to cover technical area with an in-house technical team. So that's how we got to, let's say, set up BCAS, and we've pretty much approached the industry with a tech-first approach.
Kind of a subject that's still pretty much neglected in our space, it seems. No, like even though that, like you say, you saw this opportunity already in 2017, but I can say that right now it's 2024, and I don't feel like this subject is clear these days. You know what I mean? Or that's like for sure there are more like people who deal with it other than unlike 2017, but still the whole concept of the legality of DeFi maybe and all that kind of stuff is pretty vague to say the least.
I think there's a bit of a general misconception that just because you, let's say, exist outside a legal framework doesn't mean that you are illegal.
Yeah.
And also vice versa. Just because you believe that you are decentralized doesn't mean that you shouldn't be looking at what the law states and whether you're actually doing things above board. So I think there's sometimes it's either let's say lack of understanding from on part of the regulators or on part of, let's say, other advisors or law firms, or even again from the industry itself. And this is precisely what we aim to do. We try to bridge this gap that there is between law and technology, so that we ensure that as much as possible, any of the projects that we advise are, let's say, doing things in the right way, not necessarily with a regulatory approval, because if they don't need it, they don't need it. But at least structure things in the right manner, because otherwise asking for forgiveness later on might not always be the best approach.
And most of your clients are still like from the centralized side of the industry, or are there more and more clients from what we can call the decentralized side of the industry? How does that market share look?
That's a good question and a good observation. We've noticed that in the past 2 years or so, there's been a shift in the manner that you just described. So historically, most of our clients were centralized service providers, so exchanges and the like. But especially in the past couple of years, we've seen a surge in interest and engagements as well from clients that are more on the decentralized side, so to speak. So yes, we have noticed that particular shift.
I'm Jewish, and I think that in Jewish for Jewish people, there's the concept of kosher. You know what it means?
Yeah. Yes.
I think that as DeFi businesses become like more and more like actual businesses, and they bring in revenue, and they start actually make a living from what they do, this money needs to get a kosher stamp in one way or another, because people, as much as they like it's great to even be a DeFi whale, but at some point you do want to do some real life things with your actual money, and you want I don't know, real life assets. So you're gonna have to go into the regular system at some point for something. You can't do it all on chain, at least yet. So it's definitely there's always, or at least I don't know if always, but there's a long future ahead of us. It seems that there's going to be quite the interaction between these two worlds. So I think that entities like BCAS are going to still have lots of work to do until this whole interaction between the two sides become as frictionless as possible. And one of the cases that was actually kind of interesting to me was something that you wrote about the case with Wi-Fi. So I kind of wanted to maybe if we can even have the article on the screen, Sam, and maybe we can kind of walk us through it, because it really is a fascinating story. and I'm quite curious to how can you present it to us from like your side of things? How did things even start? Who even approached you, and what was the whole this whole journey? Because I know that most people probably won't read it, but I definitely recommend that you can. We'll share the link after it in the description or in the comments. But maybe you can walk us through it, Jonathan.
Certainly happy to do so. So, back in I would say the latter days of DeFi summer in 2020, we were approached by one of our exchange clients who asked us to provide the legal opinions on some of the prevalent tokens back then. So we're covering tokens like Comp, Uni, there was even, I believe, Badger DAO, Wi-Fi, etc. So we had quite a few requests for these token legal opinions. And for the first, let's say, few governance tokens that we were assessing, we saw that essentially they just gave the holders voting rights in relation to the protocol. They weren't equivalent to voting rights in a legal entity or a company. So far at that point, everything was, again, pretty straightforward. We're still devising new arguments because, again, governance tokens were new, but we were quite, certain that, that they weren't going to present any particular issues. But then there was, I would say, some different versions of governance tokens, which not only granted the holders governance rights in terms of voting rights, but they also gave holders rights to revenues generated by the platform. And Wi-Fi was such an instance. There was also, if my memory serves me well, the Badger DAO token, which also gave similar rights as well. So we said, okay, hang on a minute. This doesn't seem to be just a one-off. We're seeing a bit of a shift in the trend of how governance tokens are structured, and we have to make sure that we are pretty much on the same page on how we're going to treat these kind of tokens. Now, one thing which made the Yearn finance assessment a bit problematic is because in their documentation they use the word profit. And a small parenthesis on this. Under European law, if you are a shareholder or an equity holder, apart from voting rights at general meetings, etc., you also have a right to dividend distributions, which are sourced from profits. But the European Directive on Financial Instruments, the Market and Financial Instruments Directive, MiFID in short, speaks about profit sharing and not revenue sharing. So we said, okay, if the terminology being used is such that it's very clear that one is distributing revenues rather than profits, we can make specific reference to, there being just revenues and not profits. But with Yearn Finance, we had this problem where the word used was profit. So we couldn't just stop at face value on the documentation. Otherwise, we'd have concluded, well, they're saying it's a profit sharing. So I'm sorry, but this is a financial instrument. But we said, okay, we have to dig deeper into this and see exactly what they mean by profit sharing and whether it is really profit sharing in the sense that profit sharing of a company or whether it's, again, something else which they're terming as profit sharing, but it's not really the case. So that's where we began the deep dive in Yearn Finance and how their governance works. And what we saw is that in order for the holder to be entitled to voting rights and rights to profit, they had to stake the token. Now, we discussed this internally first, as in our internal legal team, and not all the legal team members agreed that it was, again, a simple yes or no. Most of the legal team said that it's still not a financial instrument in their eyes, but there were other legal team members who said, we don't really feel comfortable that, we're going to just go back to the client and say it's not a financial instrument because, in our opinion, it is a financial instrument. So we had a call with the client, and the client said, well, can we get a ruling from the regulatory authority that we report to? And we said, we can, but it's going to take a lot of time. They will certainly not understand the technical implications, and this is going to be quite a heck of a journey. So if you want to go into this, you have to be sure that you really want this and that you will not be able to list any similar tokens until we get ruling. So, but they said, let's go for it and let's see what the authority in question says. So we went to the regulatory authority and we explained the facts of the case. We explained to them that in our opinion, it's not a financial instrument. And the regulatory authority said, we'll discuss internally. And they pretty much had the same problem that we had. Some departments said that they believe it's a financial instrument, a security. Some others said it's not. So what happened next was that they referred this particular case to an external law firm in order to get independent opinion. And the independent law firm concluded at first instance that Wi-Fi is indeed a security. However, as explained in the
Again,
article,
Jonathan, who confirmed that it was? Who said it was a security at that point?
the external law firm, which the regulatory authority engaged in order to get an independent opinion. So at that moment in time, all of a sudden, the authority comes back to us and says, listen, we engaged this independent law firm who said that security will give you 15 days within which to get back to us and give us your counter argument as to why we should reject this opinion and why you believe that Wi-Fi is not security. So against a ticking clock, we had to get our heads together once again. We went through the developments that had taken place on Yearn Finance and technical documentation once again. And we devised, I would say, a two-staged novel argument, which we built on top of the previous one. But this time round, we made the first argument a completely novel one. What was the first argument? We said, let's evaluate Wi-Fi as a token in and of itself. Wi-Fi as an ERC20 token does not give you any particular rights, so to speak.
Yeah.
If you just hold Wi-Fi in your MetaMask, let's say, you won't have any voting rights. You won't receive any profits. So Wi-Fi in and of its own doesn't grant the holder any particular rights which are equivalent to rights that a holder of a transferable security would have. You would only be, let's say, entitled to those rights if you stake that token, if you as a user take the active decision to stake that token in the governance contract, and then you would be able to exercise your rights in terms of voting rights and be eligible to receive a portion of the revenues distributed through the Yearn Finance protocol. So that was our first argument. The second argument, which we termed as saying to the authority as, listen, if you reject the first one, then at least take into consideration the second one. And we said, well, even if you, let's say, you have governance rights, these are not governance rights in a company. Yearn Finance is not a company. Yearn Finance is just a suite of smart contracts. It's not a company by any stretch of the imagination. And neither can it be seen as anything even remotely resembling a legal entity like a partnership, etc. It's, again, just tech and open source and the various contributors from different areas of the world contributing towards supporting this open source project. And we said, since there are no proprietary rights, there are no ownership rights, because even if we take a look at the concept of ownership, token holders don't own the protocol. There's no such thing of ownership of the protocol. So we said there are no proprietary rights, no ownership rights. So we went back with those arguments. And the authority came back to us saying that they accepted our argumentation, but that they're going to refer this to yet another law firm. So by now, there's another additional law firm that was included into the whole story, and they send them our lines of argumentation. They send them the previous legal opinion as well. It was sent over by the other law firm, and they said, what are your thoughts on this?
And this is another company basically hired by the authorities to give them their opinions?
So the regulatory authorities tend to work through secondments and also external law firms as well. And what happened in this particular instance is that first they went I can't mention countries and names because there are still, let's say, this was a private ruling rather than a public one. And that's why I mentioned the regulatory authority, because I'm seeing the questions using a pseudonym. However, I can say that this is a regulatory authority in the European Economic Area, and that initially they reached out to a law firm in Germany, and then they reached out to another law firm in Switzerland. And the second law firm, which was in Switzerland, went through our arguments, went through the previous legal opinion, and they confirmed that we were correct in our lines of our argumentation. So the authority then came back to us and said, well, on the basis of the arguments that you laid out, we accepted the arguments being made, and the private ruling confirmed that Wi-Fi was not a financial instrument, therefore not a security.
Can I just talk about, like, as a American living in Burgerville, just the openness and actual ability for a firm like yours to reach out to the regulator, engage in discussions, and within a reasonable but probably longer period of time, receive a ruling like this, which allows you to facilitate operations and to be compliant within the EU and European regulatory area, versus ours, where it's highly political. Nobody says anything. We just get denial letters, and there's just a level of transparency here that I just don't see in this side of the pond.
So far, I can say that the regulatory authorities that we worked with over the past 6 years or so, I don't think we've encountered one authority which was, let's say, not reasonable, as in this particular case. One can say that perhaps the ruling took a bit of time because it did take almost a year to obtain. So it depends on your perspective. But what I can say is that they were transparent, as you're saying, and they were forthcoming, and they actually engaged in an active discussion. Now, Sam, do keep in mind that, as I said, this is only based on our experience so far with the authorities that we dealt with, because ultimately the European Union is made up of numerous countries. So you might find some authorities which are easy to deal with, some which are less so. But what I can say is that specifically when it comes to crypto, due to its novelty, so far all the authorities that we dealt with are actually keen on learning and holding constructive discussions rather than just, saying, we don't like this, so we don't care what you say and won't engage in discussions.
So can we talk about, like, when you're looking at these different protocols, like, what are some of the elements that go into, like, defining something as a, like, DeFi contract in this case? I know that there's a article that was published yesterday by the Polygon legal team, and this was specifically around, like, US regulations, but they were looking at whether there's, like, upgrade authority in the contracts. They're trying to set, like, a minimum level of control that the developers might have, whether it's like a kill switch or some sort of pause that just allows for withdrawals but no more deposits, and can pause the operational side of the contracts. How does that get factored into something like Yearn?
Under European laws, generally speaking, this is one of the major differences between European laws on securities and American laws. The element of decentralization doesn't really matter that much. The only exception to that is when analyzing whether the token might possibly constitute a unit in a collective investment scheme, a unit in a fund. Where in that case, we have to take a look at the underlying arrangement, that's the term used in fund laws, and see whether the underlying arrangement, the pooling of assets, how funds are distributed, etc., whether that arrangement is decentralized or not. Because if that arrangement is decentralized, then in that case, there is no management on behalf of others of pooled assets. Whereas if there's an element of centralization, we have to see whether there's an element of management of funds on behalf of others. But that's the only, I would say, exception to the general rule that decentralization is not a key factor in determining whether a token classifies as security or not under European laws.
Yeah. And I think the other prong that you guys were talking about was like liability, right? Like a company has liability when it comes to its shareholders. Like if it makes a mistake or someone wants to be sued, like there's a clear chain of who you would file with, and what jurisdiction you would go to. With these smart contracts, when there's nobody controlling it, you just have a set of non-developers or semi-non-developers that are pushing these contracts out. The question becomes like, oh, okay, if there's an issue, like who do I sue, right? Like what court do I take this in? And in I think this case with Yearn, like it's a decentralized product. You're taking the risk by using the smart contracts. So like if there is a problem, like where would you even go? Like how do you sue a contract, right?
Yep. So it all depends on the smart contract in question. If we're talking about an open source smart contract which was renounced, for instance, fully renounced, then in that case, I would say that the potential of liability or risk on the developers is very minimal. Because again, open source, released, renounced, and it's up to the user to do their due diligence. It's out there; it cannot be changed. They have to check that everything is above board and they're comfortable interacting with it, and that's it. Then things, of course, start becoming a bit more complex if we're talking about partly renounced smart contracts, if we're talking about multi-sig arrangements. So then it's, basically the more that you have the slider towards centralization, the higher the risk and potential liability that is placed on, let's say, the developers or the relevant core team behind a particular project. As we like to tell our clients, decentralization is not easy to achieve. And there isn't, anything which we can term as a definite threshold of what is, like, okay, once you pass this threshold, then you're safe. Because it's, constantly having to strive for decentralization, and there's no such thing as absolute decentralization. But what can be done is, constant efforts to, as much as possible, further decentralize the project or protocol in question. And the more you decentralize, the less points there are for any authority or prosecutor or anything to latch onto as a point of, potential risk or liability.
So now that this framework has been completed, what does it mean for other projects that are currently being built or that exist and would like to have this same type of regulatory control and authority inside the European Union?
So now so incidentally, Sam, on Monday, there's been the release of what is known as a consultation package by the European Securities Market Authority. This is basically the European authority overseeing securities markets, and MiCA as well. And this third consultation package was the final one. So now we have quite a holistic picture of what the MiCA framework looks like, including the first level legislation, secondary level, and the third level as well, because it's split in different levels. And now we can say, okay, this is what it means to be regulated under MiCA, to operate under MiCA, or this is what it will mean to work outside of MiCA. What does this mean, broadly speaking, for DeFi? There is a bit of I would say, an exemption for DeFi under MiCA, which at the same time is not much of an exemption at all. Because MiCA speaks about the exemption relating to service providers who offer their services in a fully decentralized manner without intermediaries. Now, there's no such thing as full decentralization, and it's all about, okay, how do you set the yardstick in terms of determining whether you're actually caught under MiCA or not. But basically, the long story short is that if you are using DeFi and the DAO as a smoke screen, when in reality you're, let's say, a centralized service provider who's operating in a non-regulated manner, in a licensed manner, well, then you should be looking at the operations that you're conducting and try to get your business in order as soon as possible, either by obtaining a license or otherwise really making yourself decentralized. But otherwise, if we're talking again about smart contracts, a group of smart contracts, open source, being maintained by the community, the fee structure is such, if there is one, that it goes back into a treasury which is community owned, and there really are, everything looks that as if best efforts are being taken to conduct your business, or rather than your business, you are operating the protocol in such a manner that it's really DeFi, then you shouldn't be worrying as such. But again, it's always best to check with a competent lawyer just to make sure that you're above board and that, of course, you're not running any particular risks.
I do have another thing to add, though, another thing to touch on that subject, though, because I do think that sometimes it seems like a team can do everything like okay on their side, at least. But if the regulator, from some reason, whether it's rightful or not, decides that he doesn't want to play along, they still have to go after the people themselves, for example, rather than the protocol. I think that one example, maybe it's a bit extreme, but the Tornado Cash example with Alexei Pertsev, that I think that again, I'm no expert on that kind of stuff, but this is a code. A code is a code, and it didn't seem to help Alexei. That code is just code, you know what I mean? Because he wrote the wrong code on some level, you know what I mean?
Yeah.
Sorry, Sam, you were going ahead, or?
Oh no, no. Go ahead.
Okay. So there's one fundamental difference between the US and most EU member states.
Yeah.
In that, the US follows the common law system, which is based on jurisprudence and the principle of precedent, whereas in the continent, it's more of, let's say, a civil law system where there's the law first and then, let's say, jurisprudence second. So MiCA, for instance, is the most comprehensive regulatory framework because including the first, second, and third level regulations, we're talking about close to or even more than 1,000 pages. That level of complexity plays in the favor of the industry in a sense, because again, with the assistance of lawyers, you can go through all the different regulations or different rules and be able to arrive to a quite an appreciable degree of certainty on what goes and what doesn't go, rather than having to stick your finger up in the air and say, okay, I think this might be this, but since there's no court case on this and since there are no clear laws on this, hey,
Yeah.
it's just an opinion. Whereas from our end, we can base ourselves precisely on what the law states. Secondly, in terms of, again, whether to have a legal entity in place or whether to do things in your own name, do keep in mind that these so-called DAO wrappers, these legal entities, which they say that they're using them in order to represent the DAO. The moment you have a legal entity in place, that's a point of centralization. And even though that legal entity might be there to limit liability, etc., it's still a point of centralization. It's still a potential point of risk. So then you have to gauge that and say, okay, but if we were to go fully decentralized, if there's no legal entity in place, what other measures we can take to protect ourselves? I mean, if you're writing code, you're not doing any illegalities, there are measures to protect your privacy, like using a pseudonym, etc., which again might be a reasonable approach to take. But as long as you're not committing illegalities, as long as you're operating out of the jurisdiction where the rules are clear, and as long as you're also taking measures to, again, where it makes sense to protect your privacy and just be part of a broader community, then I would say that that's a good way to mitigate one's risk.
Great. Thanks a lot, Jonathan. Really appreciate you coming on and explain this case. Honestly, a fascinating topic in my opinion, and I think that we're actually going to hear more and more about that kind of stuff as more and more projects, I don't know, move forward within the industry, making a lot of revenue, hopefully, and like I said, I want to kosherize it in a way. And appreciate the work you do, and appreciate your time and you coming on to share the story with us. Hope to have you on back in the future with some other interesting stories, hopefully.
Would be happy to do so. Keep up the great work, guys, and thanks a lot.